So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at OptionAlpha.com. Welcome back to The Daily Call. Today we're going to be talking about how you could actually buy options with a 70% chance of success. Now, everyone always talks about option selling, and that's mainly what we focus on as well, is option selling with a high probability of success. But oftentimes I get questions around option buying, and can you buy options with a high probability of success? And so the answer to that question is yes, you can definitely buy options with a high probability of success. That means that you're buying options that are deep in the money or in the money option contracts. And when you do this, you're paying a really high price for those contracts because they have the inherent possibility of generating some money. Now, the problem with buying options, even when you buy them in the money, is that you often give up a lot of your premium early on to volatility and time decay, just like you would get a lot of that premium if you were an option seller on the other side. So even though you can set up a trade with the 70% chance of success as an option buyer, remember that implied volatility works to your disadvantage as an option buyer, which means that you actually might win less than 70% of the time if you actually let the numbers play out in the future. So because of this disparity, this edge that goes to the option seller, because of IV's over expectation, you really have to make sure that the position that you're in is something that you really feel confident about, that you're really confident that the stock is going to move the direction you want, or the stock is going to fall in the manner or time period that you want. So it's not something I obviously advise. It's something that we 100% advise against, but I think it's something you could do. You could buy options with a high probability of success. We'll see if you actually end up making money after implied volatility sets in and after the expiration period is complete. But chances are you're going to have to outlay a significant portion of capital to get that trade on, and your probability of winning a lot of money is going to be dramatically lower. So with option buying in deep in the money contracts like this, you start replicating more and more a stock position, which means you're outlaying more and more capital for a lower and lower probability or return on capital. So as always, if you guys have any questions, let me know. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.